Hey everybody, Raghee here. I don't have any intro music, but we're going to work on that. And welcome to the very first Sunday weekly Notes Live session with some water. No coffee. So we'll be doing, I imagine we'll be doing this each and every Sunday around 6 o'clock, a little bit before, a little bit after 6. I actually start taking a look at the markets. And the reason for the timing is that we are seeing the very beginning of the week as Auckland, Sydney, Tokyo, Hong Kong, and Singapore start to open up for the day. So, it's a relatively illiquid time. This is not a very liquid time of day, Sunday evening, but we're getting the very first look at the markets. It doesn't mean that this is what we're going to see in Europe or the UK, or even by the time we get to the US Open tomorrow, Monday at 9:30, but it's the first look. And you can see as we are opening up, we're getting the very first look at what kind of sentiment is coming into the market. And it's bearish. We are seeing a small gap down. In fact, we're trying to push through the Friday low. Now, if you've been following me in Charts and Coffee, which I'm sure a lot of you have and do, and if you've been following the free videos and the notes that I share, you know that we have been bearish the equity markets with the emphasis on tech, followed by small cap. So the notes that I'm referring to, for those of you that are not members of Simpler Futures, Simpler Options, or the Sector Secrets Mastery, I'll be referring to the notes that I send out to members, but we'll be having a conversation around that. So hopefully you'll get a good gist of what the notes are hopefully preparing us for and what kind of week, the sentiment for the week I have. It's still very much risk aversion. It's still also very much one where we know we're on the upper end of volatility. So let me kind of scroll down to where I've discussed volatility here. And of course, we are going to take questions. I've given everybody about 30 minutes to take a look at the notes before we start the show. If in the future you're thinking, hey, Rog, maybe we need an hour or whatnot, we can see what we can do to give everyone a little bit more time to read the notes before attending the show. All right, so let's get on down to the VIX conversation. Actually, let me just open this up. So what I wanted to share with you all is we have a lot of charts in this week's notes. So you'll see I've got charts on NAS, S&P. This is Apple and XLK, because I do think the linchpin is very much Apple. So we'll be, linchpin meaning if we're going to see some really significant movement in the S&P and the Dow to the downside this week, I'll be watching XLK. I'll be watching Apple. But here we go. This is the chart that I was referring to, and this is that VIX chart that's already been marked up. So let's take a look at it on the screen. And the idea here is that, let's go on over here. All right, so the idea here is that what we're looking at is the beginning of what could be an uptrend. I do want to point out the propulsion for the 21, the propulsion for the 13, they're very active. And this is very often the precursor to an uptrend, but we're not there yet. So it's very important to not front run the analysis, to front run the process that would confirm an uptrend. Because frankly, we've seen periods of time where we've seen a lot of bullishness, but this is the first time we've seen this prolong a period of time with the 21 propulsion dots lit up. So if there is a chance that we take out 33 and continue to move higher, this is really going to be it, which means that if we exhaust in this area, it looks like volatility, at least for the near term, is here to stay. I would not be surprised to see a pullback to the 21 or a pullback to the wave, and this to continue to march higher. All right. This is not projecting where it's going to go. This is not about projecting how far down it may go or how far up it may go. It's really about assessing the trend and asking ourselves, what is the path of least resistance? And it is up. All right. It is absolutely up. All right. So that's probably one of the more important parts of the notes. And the other part, I would say, is easily this conversation about the, here we go, the target rate. Just bear with me here. The target rate. And you'll see we have not just the March, which, by the way, gang, it's always been a quarter point probability that's been discounted the most and for the longest. All right, the most and for the longest. It's July that becomes the big month for us, because July, are we going to see a fourth rate hike? And what are the probabilities mapping forward after the March quarter point hike, May, and June? Because the question is not now, and it really hasn't ever been, at least for this year, the last 60 days or so. It's never been, will we or won't we hike in March? That was a conversation only happening on television. What this was how much, and then it became how many. How much, meaning will we see a quarter or a half point in March? And then we know it's a quarter. And then how many hikes could we see throughout 2022? So that's really the most important part of the conversation now, the how many. And every single big blowout jobs number like the NFP last Friday, every high heated up read on the CPI, every single new high on crude oil is just going to put the pressure on the Federal Reserve to continue to remain hawkish, okay, in terms of rates. All right, so with that being said, that gives you some insight into what we're looking at on the notes. I have some important sector breakdowns included as well, with a 1 and 3 month contrast, which I explain why, as well as some important levels in terms of volume, support, and resistance on the S&P and on the NASDAQ, from the propulsion to points of control to Darvis levels to watch. All right, so let's go ahead and jump into the questions. All right, and this particular show, our Sunday show, is going to be about 20 to 30 minutes, no longer than 30, probably no shorter than 20, and we'll get through as many of the questions as we can. So thank you so much. Quite a few of you showed up on a Sunday evening. Very cool. I wasn't sure how this would go, but yeah, let's see how we go. I'm actually thanks for showing up. I'm actually a little surprised that folks are on Sunday night. No, anyway. All right, James, let's kick it off. How you doing, my friend? Just finished building my watch list. ITA looks like it wants to organize into an uptrend. There we go. And I'm keeping an eye on RTX. So what I would say, James, and you know what this process is. You're familiar with the process and the sector secrets mastery for what we do to build a watch list. And what we do is we basically take a look at the multi-chart, where we crack this thing open and we look at what kind of structure we have in the individual names. Now, here's what's interesting to your point. Whether or not ITA ultimately goes into an uptrend, at least for north of the 200 propulsion. So that at least is on the bullish side of things, the bullish hemisphere, as I call it. RTX, gosh, take a look at Lockheed Martin. Take a look at Northrop Grumman. What else is on this list? L3. I would also keep an eye on General Dynamics. We have a number of double greens here. The one that's closest to giving us an entry, and also I would say also the one that's probably the most affordable on this list, I like it, is RTX. So it satisfies the uptrend criteria. It has some proximity to a pullback, and it's going to be one of the less expensive of the stocks that are heavily weighted within this ITA. So if we break down RTX, we know that we have a double green structure, and I don't have a lot to work with here in terms of the 8, 13, or 21 EMAs. Notice there's only 2 dots, and that's a little tricky. That's very aggressive in terms of an entry. What we do have is a very beefy volume ledge. Look at all that volume corresponding with the wave. And I know that seems like a long way down, but that's exactly what I would like to take advantage of. So the most aggressive I would probably be, James, is the 21 exponential, because by the time we get down there, if we were to get down there, I'll get that required at least third dot in a row. Maybe by then I've got 4 or 5. 5 is my preference. 3 is the minimum. So that's where that 21, it's proximity to that thick layer of volume. We've got the wave coming in there, and I should have more dots to validate that 21. So what I would say is double green, overall uptrend. Yeah, let's look for an opportunity to get long. And it is the heaviest weighted. Right, exactly, James. Beautiful. Beautiful setup. I'm with you, Kathy. I think a lot of folks are waiting for that pullback on RTX. That's the zone that I'm looking for. So really, the way that I would look at this would be sort of like this. All right, I would consider this sort of the aggressive yellow, be careful. Don't load, as we say, load the truck up at that level. Let's at least maybe engage the market in that area. And then if we get a third dot around the 13, we've got a tiny volume ledge in there. I would treat that as rather aggressive. We do have that tiny volume ledge accompanying that 13 EMA. That's not too bad. That's not too bad. Let's actually narrow this up because it's a very specific part right there. That's sort of this traffic light that I think about when I'm scaling in. So that's RTX. And that's even more so than that. For those of you that are curious about the process, how do we build trades in the mastery? Kathy, James, I know you know this like the back of your hands, but this is the process that we use to do it. We look at relative outperformance. We look at the broader tide, the sector or the index, and we start to break down the levels that have price significance, volume significance, as well as taking those two, the price significant, volume significant levels, and looking at them in respect to the underlying market behavior, which in this case is a double green, bullish momentum, bullish trend structure. Beautiful. Yeah, it's buy the dip ready. It's buy the dip ready. All right. So that is RTX. Cool stuff. All right. And as we are looking at the open gap up in crude, my sector secrets mastery, folks, this is why. And by the way, this is for everybody because I've been talking about getting long crude since January. This is not a Ukraine narrative, gang. This is not a narrative accompanying the geopolitical narrative, but rather the inflation, the macroeconomic narrative. And so a lot of folks are wondering, Rog, we're not scaling out of this. Where's that first target? We finally did the first target. What was it, on the 2nd of March? And then the question was, what's the next target? And I said, I really don't want to scale out of this one too quickly because we have the inflation trend on our side. We have absolutely the rocket fuel of current geopolitical situation. And we have a technical trend giving us structure. So there are times we don't want to scale out of things too quickly. And crude oil's gap up. We have, yet another move on that USO, those calls that we've got. This is fantastic. And this is likely going to take the stocks that we have long, whether that be XLE, Halliburton, it's going to take those oil stocks absolutely with it. So XLE is going to continue on for the ride, which is absolutely phenomenal in terms of, again, not taking advantage. The geopolitical situation, I would love for the situation in Ukraine to not be even happening. I mean, let's be straight up. But I don't want to make this in any way part of the narrative for our trades, because any of the trades that had technical and inflation trends were already valid. And then this geopolitical narrative is overlaying that and accelerating it. They're going parabolic, right? But that's not the reason for the uptrend. It's the reason for the acceleration within the uptrend. And so, when we're looking at this structure right now, please make sure, and I'm looking at your question there, Prabish, is it going to come back down to earth? I cannot emphasize enough, when we send out alerts in the mastery and we have a window like that where I'm saying, hey, gang, our trigger has been hit. let's get to work, right? Why do we put these out there ahead of time? Why do I encourage you all to use your platform alerts so you have a second set of eyes that's completely objective, or I should say, completely unbiased? The alert goes off or it doesn't. We only had two shots really at that window in the wave, two lows, right? And then we see what happened. The idea that we're always going to get more than one pitch across the plate exactly where we want it, right? And think about being a batter at the plate. That's not always necessarily going to be true. So I hear you, Prabish, but whether that be crude oil, whether that be oil stocks, whether that be the USO, or you mentioned natural gas, the natural gas narrative, gang, we got long natty gas. Uh, some of in the master, we did get long natty gas, and that was back in here. All right. We took a little bit of heat on these ridiculously inexpensive options. And look, taking heat, understanding that there's a certain degree of risk that we're going to have to assume is just part of the journey of the trade. We ended up taking that. And then, frankly, this wasn't weather. It was mostly geopolitics and an oversold buy. So this is a situation where we've been long since down. We have 14 strike. When was 14 strike in the money? On the 9th. It was in the money on the 10th. It was in the money on the 11th. So that was our window. We took a little bit of heat from that area. And now we see the follow through. But I will tell you, the only thing that I knew we had was a potential oversold level, the 200 propulsion. We took about 3 days of discomfort where we were down a bit, but not getting crushed on those options, because let's face it, we bought them while they were moving lower. And then now, obviously I'm looking for potentially a gap close. We're looking for higher highs, but realize this was never, think of the timing of this entry. This was never a Ukraine narrative, right? This was always going to be possibly taking advantage of weather. I mean, that's what was on our mind. Oversold natural gas in winter in the US. All we needed was a catalyst of weather, and it sends natty gas higher. And then, of course, now we've got so much more that we never could have anticipated was going to be the situation. So we just ride it higher. We take advantage of what we have. When it's going to come back down, my friend, I wish I could tell you, but most of the trends that we have in play right now preceded the geopolitical situation. So with that geopolitics in play, gosh, I do not know, but we keep taking out one volume ledge after another. And maybe one of those volume ledges could be, if retested, something to look at. So I hear you. Yeah, I don't want to even look at my utility bill next month. I know what the gasoline, I know what it is to fill a tank right now. And I know a lot of you do too. Yeah, so I hear you on that, my friend. All right, moving on. Let's see. Charts and cocktails. Well, I am going for tacos right after the show. My husband and I are going to go. He's craving some tacos, so I'm heading, or burritos. I'm not sure. So I don't know if it's going to be Taco Sunday. Taco and trades? I don't know. Cocktail. No, I never trade under the influence. Yeah, no TUIs here, gang. Yeah, never. All right. Moving on. Let's see. Moving on. Hey there, Stephen. I am doing pretty much. Thank you for asking. I'm doing great. I'm doing great. Been There is, where is it? I think I mentioned this last week. Been diving into I've been diving into some books this week. This one right here. And then I've really been enjoying diving back into this one, right? Kudos to John for introducing me to Breaking the Habit of Being Yourself, and diving into that one again. So it's been a great weekend, a lot of reading. So I appreciate it. Thanks for asking. Okay, so next question is thoughts on VLO. Mike, I like where you're looking now. VLO. Where is VLO? Let me show you something. This is very much a process that we use a lot in the Sector Secrets Mastery. And that is index sector stock, boats and tide. And the idea is, where are individual stocks, reverse search, if you will? Where is an individual stock parked, weighted, represented within the passive investing universe? And this is why we don't really need to do a lot of active scanning in the market of just sort of the sea of equities, but rather we can focus on what are the equities within the heavily traded, good volume. Minimum for me is about 1 million shares. Where are they? And that parks us right into XLE. So Mike, yeah, I mean, VLO, XLE, it's just a matter of making sure that the stock you're looking at is tracking with the overall narrative. In this case, when I say narrative, I mean, is it tracking well with XLE? And then you'll find that sometimes an individual stock might have weighting in more than one ETF. Now, I'll prioritize the ETFs which have sufficient volume. Gang, of the, I don't know, 8,000, however many thousand ETFs are out there, I'd probably say fewer than 100 of them are really liquid. And it's the volume that basically is why it would be influential over the stock. After XLE, take a look. We have XOP down here. And I think most people probably associate VLO with XOP, the explorers. Now, some of you might say, hey, Rog, what about some of these near the top? Here's a good one. The name cracks me up, right? Oil refiners, symbol CRAK. Take a look at this, gang. 5,000 3-month average volume. That's not what I want to look at. That is not what I want to look at. What about IEO? IEO, the iShares US, another version of an XOP, right? So again, look at the volume that's traded in these ETFs before you start even concerning yourself with the holdings. This is about 263,000. That's okay, but again, I really want to see much more than that. So let me just finally show you the XLE, just so I kind of finish this thought. So here's the XLE. Yes, VLO is far less weighted, but we want to know what and take a look. There's VLO. Take a look at the stocks that are included in the ETF, and then look at the volume. 36 million. This is what I'm talking about. This is the kind of volume. This is the kind of participation that we're looking for to see whether or not XLE is going to be influential over VLO. So with that being said, we open up XLE, and what's not to like with an XLE? Look, beautiful. You picked up some calls. You're looking to take that elevator ride up. I'm with you. There's very little that's not structured, either double green, bullish momentum, bullish trend, or neutral, right? There's a few laggards here. I'd say VLO is a bit of a laggard, but here's a cool thing about laggards: when the overall ETF is moving higher, Phillips 66, Valero, Schlumberger, even though they're sort of, even Kinder Morgan, even though they're sort of laggards, they're sort of slow to rise boats. A rising tide typically lifts all boats. Now, my folks out there that are big into boats and boating and everything else, broken bilge pump. What does a bilge pump do? You can Google that. Some of these boats are sometimes going to have a broken bilge. They're taking on water and they're not getting rid of it. But for the most part, all boats rise with that tide. So good stuff. And I think you're going to see sort of a laggard reaction where that rising tide is going to take even the likes of Phillips 66 and Kinder Morgan and Schlumberger and Valero higher. Yeah, good stuff. Good stuff, Mike. All right, moving on. When the VIX goes up, typically, yes, Michael, typically when you see VIX, and I look at the VX futures, it's typically when you see volatility on the VIX, yes, moving higher. And then I use the DARVIS, the automated support and resistance levels, to find what those levels are, what those ranges are. Yes, typically as that moves higher, you're going to see equities move lower. That's the typical reaction. But then we want to know, how does the rubber meet the road for us as traders? Yes, we know that a strong VIX is typically bearish to stonks, but we should also be careful about position sizing with higher VIX because of the volatility implication. Now, we know there's corners of the market we're bearish. So we've got an open QQQ long put trade. We've got an open XLY long put trade. We have a number of these positions open in the sector secret. So that higher VIX serves our bearish open positions wonderfully. But we also know we need to be a little bit, concerned about, or at least aware, not even concerned, aware of the possible for wilder price action. So if you know that a VIX, a VX over 32 means buckle your seatbelts and take your Dramamine, at least you're prepared. And that is what trading is all about. Not predicting what the markets are going to do, but using all your different tools to get a good feel for being ready for the different possibilities, right? I think far too many traders are into, and analysts are into predicting where something's going to go. Gang, I'm going to tell you right now, that's not trading. What you want to know, what's the difference? Rog, aren't we just saying you're telling me the market could keep going up? That's true. What we do want to know, though, is not where is price going, because that somehow has this really delusion that we can predict where a market is going. We really can't. We can play probabilities, right? The minute you start venturing into, well, a market's going to this level, I don't know. The question is, what are you going to do at particular levels? So the analysis is not about where is the market going to go. It's, again, nobody knows where the markets are going, but what are you going to do when a certain price is reached? That's the game that we are playing. That's where we want to be thinking about, look, I'm not going to predict, but if prices go to this level, what am I going to do? Right? So what is my action at a certain price level? And the minute you start stepping away from prediction, and then you start recognizing, the markets are going to go here and then they're going to go there, that kind of prediction, you're in big trouble. In other words, if the market goes here, I'll take a profit. But if the market goes down here, I'll trigger an entry. Do you see that? I know it feels like splitting hairs, but it's really not. It's a completely different mentality. So think about, what will you do at certain prices, not where is it going to go in a predictive way. So I love that you were thinking that way, Mike, because that's exactly, you thought, hey, if it comes down to this level, I'll buy these calls. I know that I want to see the market go up. I don't know if it will. I don't even know to where, but I've got a pretty good chance that the probabilities are on my side. I know it sounds nuanced, but it's a huge, huge difference. Absolute difference. All right. So next up, Mike asks, can the XLF be traded as neutral? Well, let's take a look at the environment. It's been neutral since the middle of January. I would love to be long XLF, Mike. I would really love to be long. And this gap down, oh man, this gap down. Let's see what kind of size we're dealing with here on XLF. That's a good look, Mike. Yeah. Do we have any volume in that area since the early part of this year? Yeah, a little bit. Take a look. We have a ledge. So we have a ledge. We do. Take a look right in there. That's a nice support ledge right in there. That is Mike, good eye. I like that. I'm going to lighten up this background a little bit. There we go. Okay, so there's a ledge, but then we also have a ledge right here. So I would consider that a resistance ledge. Absolutely consider that a resistance ledge. So we'll keep an eye on that. But look how many times we've gotten down here. Fourth time. Neutral market, right? This is a neutral market, which means we can ask ourselves, is this? It is. It's oversold. 17 reading on the slow stochastic. This is an oversold market. So if you're looking at the slow stochastic that I've taught you all to plot on the screen, you know that we're sitting below or at that 20. That's a good look. That's an interesting one. So now the idea is we could fade XLF. It's very liquid. And then we can also then coordinate that with, you guessed it, what are the relative outperformers? Is there anything double green that's pulling back with this move? So American Express comes to mind. I would say only focus on names at or above the 200. So MS out, JP Morgan out, uh, C out, PNC out. Yeah, so some of these are south of the equator, so Morgan Stanley, Bank of America is iffy, JP Morgan definite no. So any of the double reds, PNC double red, Morgan Stanley double red, JP Morgan, do not go try and picking a bottom in those double reds, but the neutral trends, yeah, those are very interesting. And XLF is a neutral trend. So beautiful. Yeah, I'm getting a slack from Lorna talking about our positions in the mastery. Lorna said, our KMI, USO, and XLE are going to be ridiculous. They are. My sector folks, yeah, we'll keep an eye on those as well. So, gang, let's wrap up here. I wanted to do about a 30-minute show, and thank you. Gosh, we have almost 200 people watching. Wow. Gosh, thanks for an ego boost, gangs. I did not know how the Sunday show was going to go, but kudos for those of you that realize that we start preparing for the week on a Sunday night. Just, an hour or two, and then go back to enjoying some time with your family. There's a new episode of Billions on tonight. The show that comes after Billions, Super Pumped, is pretty cool. It's an interesting look at the growth, the sort of origin story of Uber, which used to be called Uber Cab. I had no idea. So some cool things. Chill out a little bit. And then, yeah, that 30 minutes goes fast. Exactly, Lorna Bot. But thank you, everybody, for joining us. I'll get the replay link for those of you that have the notes. I'll post a replay there. I'll see you all for Charts and Coffee tomorrow, 9 a.m., our pregame show, 9 to 9:20. And yeah, it looks like the Sunday show is probably going to be here to stay. So I'm going to go enjoy some dinner. Enjoy the rest of your Sunday, gang. Take a look at the notes. I'll see you tomorrow at Charts and Coffee. And if you haven't already penciled it in, remember this Wednesday, we have the webinar. So for those of you wondering, all right, all this analysis, Rog, what kind of trades? And this is, look, I wish we got paid to just sit around and analyze markets. But at the end of the day, we're traders. I'm trying to find the link here. We get paid when we pick a trade and it goes in the direction that we think it's going to go in. That is my job, to find trades that are going to, move. So you hear me analyzing charts all the time. So Rog, how have you been trading? What are you in? Why are you in it? What tools are you using? Well, most of you already know the tools because I've been giving them away for free for years. Check out the tools over at Countdown Trader. This Wednesday, we're going to be talking about the kind of trades we've been putting on, the tools I've been using, how I've been reading the tools to understand these technical trends. And yes, gang, all my cards on the table. We're going to be talking about what I've been doing in the mastery. And a lot of folks have been asking for a different way to be able to see what we're doing. And that's exactly what we're going to be able to do. Break it down so folks that, feel a little uneasy about a longer term commitment, you have a way to at least see what we're doing in this environment. Because, I don't want to brag and upset the trading gods, but we've been killing it. The end of January on has just been in fuego, and it has not a lot to do with the Ukraine narrative. It has everything to do with technical trends, outperformers, and inflation, all right, which is something we're going to deal with long after, hopefully, this awful situation in Ukraine is through, all right? Okay, gang, as always. So is there a new course? Nope, not a class. Not a class, Wilbur. This is not going to be an indicator. This is not going to be a class. This is about what are we doing in the mastery. And for those of you that say, yeah, Rog, this is something that looks interesting to me, we're going to have an offer for you for that. All right. But if you've ever attended any of our webinars, Trish puts together very educational, in-depth webinars. I'm looking forward to breaking down some trades with you all on Wednesday night. I'll see you all soon. I'll talk with you tomorrow morning. Be good to each other.